Hello? Alright. New York AM from. Let me turn this off real quick. New York AM, which is from 9:30 over to 11, retains three characteristics and only three, unless it just consolidates because it's a bank holiday or something. So turn this back on. This is pre-session. So during this time, New York AM has three different characteristics, and the first one is expansion, or E, and then manipulation, expansion, or ME, and then manipulation, expansion, MME. Today, it was characterized by expansion. As soon as New York open hit 9:30 a.m., we didn't leave any time to go garner any trailed stops in here. From this was the high of the day. So it was clear this morning that we were going to get shorts off the bat, at least I thought. And then this was the high. And then, so the reason why I say trailed stops is because any retail traders or firms that are short up in here or anywhere up in here, the algorithm will go and sweep their stops out because retail trading works like this. So as soon as they say they manage to top tick here, they enter like right here for a short, right? They see a retracement and then it goes down farther. Some would trail their stops right to here. That's how, see, smart money is also short in here and retail is short in here. But smart money does not trail their stops in the same way that retail does. So when retail is short, smart money is never going to put themselves in a losing position. So they have to get retail out of there. So that creates trailed stops. Retail logic is short right here, higher high, lower low, trail your stop loss right to here. And this is what the entirety of my model is predicated on. Right here, we also have obvious trailed stops for the 15-second chart because these are relative equal highs. And they're not at the top, they're in the middle of the session, which is what I look for typically. And these are what I was targeting this morning for longs. So these are very obvious and very clean trailed stops that the market at 9:30 will run to because bias was here. I was under the impression that at 9:30 bias was down. So before we went down, smart money, who's short up in here, had to go and sweep out trailed stops right here, and then uh, go down from there, or they could go up higher. But that was what I imagined. But on days where it's just expansion, where out at 9:30 it rips right off the open, which is a characteristic of spring and summer months, sometimes fall months, where there's low resistance liquidity runs and really clean price action. And this is the one time where my model, aside from like bank holidays, where my model just um, fails and does not present itself at all. So what I would expect originally is for us to go and minimum sweep these, likely sweep these, probably leave these open. So that way, smart money who's short in here can still stop out the retail traders who are short up in here by using that logic against them. They go and stop them out right here, even though their original shorts were up here. And then smart money can add to their positions right here by taking their stops out. And this way, I don't have to rely on bias so much because if bias was up at 9:30, it would have gone to trailed stops. If bias was shorts, it would have gone to trailed stops because either way it has to sweep these out before it goes down, and it has to sweep this out before it goes up. And if bias was up, I'd have to determine whether we had enough trailed stops. But these relative equal lows really obvious, so I thought we were gonna get shorts at least till there. And so this morning, because it was the expansion characteristic, I this was a losing morning. I lost about $550 P&L. Were it manipulation, expansion, or manipulation, manipulation, expansion, I would have been able to get more secured profits off of this. So instead I've had to adjust my model. So I was using the 5-minute chart over here right at 9:30 because I was assuming at 9:30 we would maybe sweep some like 5-second liquidity or something, like just Judas swing these lows on the 5-second chart, get an IFE jack along up to here. And I was using this fair value gap right here. This one seemed pertinent. I was using this one. And then 15-second chart. Right here. See how our price was staying in the upper half of this, but it created relative equal lows right here. So we went down, swept them. I longed right around here. Got stopped by this candle. That was one of my longs. But we went down and swept these. And after that, I should have anticipated, or no. After that, I would have only wanted to see price remain inside this fair value gap and preferably in the upper half. It's fine if it goes to the low because my bias was shorts. And I'd only be expecting price to go up to here. At minimum, bare minimum here. But that's not that many trail stops because it's a sub 1 minute time frame, but there's a lot more right here. But we just expanded off of New York AM. So I didn't get the chance to, market didn't sweep out any trailed stops. But on days where it's manipulation expansion or manipulation and manipulation expansion, it always does. And that's why I like this model for high resistance days or just bad price action in general, because it uses the 1-second chart, and even if it's horrible price action, it's hard for them to disrupt the 1-second chart or 5-second chart at opening bell. There's a ton of volatility. It looks like the 1 minute. That's not 9:30. It looks like the 1 minute chart if you zoom in. Maybe a little bit different actually. But when it's just running a bit cleaner. Well, it's all time frames are like the 1 minute. But yeah, so now I augmented my model so that when I see this occurring, typically for this model I have to name out confluences beforehand, like this one that I got. And for example, if I were looking to short after we swept these trailed stops, I would go over here and maybe I'd choose this fair value gap or this order block right here if I was very confident we were going to reverse off of that, or maybe like maybe this one. No, that's too big, but like I would have to choose essentially the confluence that I wanted price to reverse off of. And here I'd probably choose this order block or that fair value gap. Right there. And I have to have these marked up before I trade because it's the 5-second chart and price moves so quickly, so I can't mark it out while I'm looking for the trade. And most of the time, around 70%, I will pick the right one, and that will cause it to reverse off of it because we set the liquidity nearest confluence right above it. It doesn't matter what time frame. I like the smaller gaps because it's more precise. and then it will run off that. If I see it respecting it and staying below consequent encroachment, IFEG will short off that, and that's pretty good. So an example of a manipulation expansion day was yesterday. Yesterday was very clean for this model. Right down here, very nice reversal off of this. It's like the black hole confluence or whatever you call it. It's like event horizon between these two lows. We opened up. Overall bias was higher. We had done PO3 manipulation down here. Overall bias was up, but at the open, we went. I guess this was manipulation expansion. We went and we manipulated these highs out, right? And then we went down and manipulated this low. That garnered the trailed stops that I was talking about. Because both retail and smart money was long in here. Smart money doesn't want retail to make any money. So smart money has codified the logic that whenever price is trending, so it's trending upward, like I said, smart money or retail will trail their stops to obvious lows like this one. And that garnered all their liquidity. While smart money remained in their positions right over here. And this is when order blocks work. See, then even it was so willing to go up, and it was aligned with this event horizon, that price, the bodies didn't even want to go inside of the order block at all. Because smart money does not want to put any of their massive positions into negative at all. So they're very willing to push it up. And then from there, after we had the trailed stops taken out, both sides of the market were manipulated. Sells. Any sellers up in here and right here, retail did not, or smart money did not want retail to make any money, so they swept them out. Cleared that side of the market, went down, swept out the buyers from here, cleared that side of the market, and then they ran it in the direction that they wanted to. That's an example of manipulation expansion. And manipulation expansion would just be where we didn't clear this out first, went down, hit this, and then went up. So manipulation expansion, they clear both sides of the market before they run it in their direction. And first they'll do the side that they manipulate towards. So they manipulated towards this low. Overall, the direction was up. And they manipulated these first because they were so ruthless they didn't even want the sellers in here to make money from that. And they also needed the liquidity to push it down there. Well, not really. That's not how it works, but yeah. And then manipulation expansion is just to say that this wick did not sweep these highs right here. We just opened, went down, tagged this order block, got these trailed stops, hit event horizon, leaving these relative equal lows. And then they pushed it higher. And whenever you see these types of relative equal lows form, and you basically, you're kind of longing, like in this position, say you longed right here, you're longing as if you were trading support and resistance. This is technically a support level right here. It didn't hit it exactly, it got close though. This would probably be like some, I don't know how they work, but supply zone, it looks like. And when support and resistance only works when you're buying with the market makers. So the market makers, they're in a position right here, and you'd be buying with them. And then once they exit all their longs from right here, and they stacked more orders right here, after they swept out this, got these retail stops. Say like smart money, whenever they reach their end target, that's when they'll go and sweep out these relative equal lows. So they probably hit it somewhere around here or something. And then they tagged in shorts right there. So before they go to their overall target, I don't know if this is their overall target, it's just their next target probably, they're going to have to sweep out some degree of trailed stops up in there. So as for the what I implemented to hedge against this, because some days are going to be expansion. In the past several months, we haven't had many because it's been really poor price action, which has allowed this model to do well. But to hedge against it, I'll pick the confluence, which in this case was this one, and it's likely to be this one because we had just swept these trailed stops right here. This was our next minor sell side target. We swept them. We had this obvious fair value gap below, and price was indicating right here that there's a good chance it's going to want to key off of this and go up and get these trailed stops because we were remaining in the upper half. But no bodies went below upper half until right here, just before 9:30. And if after two trades, or if it invalidates the confluence, I'll lose my interest in trading for that day, and I'm not going to trade it. And then I'll switch to the 1 minute. And if I note that the day is just expanding like this is really easy to trade because you know the direction. The draw on liquidity is going to be pretty obvious typically. It's these relative equal lows. This low was the primary one, and then it went lower, even lower to this one, and then to this one later on. And trading this at the open for like the first 15 minutes or so, I don't know how long, is really easy because you can either just wait till a fair value gap forms like this. Then this was a lower time frame bear flag that worked. And right here, say price went up in here and hit the wick and just went a little bit above it. That'd be IO Fed institutional order flow entry drill, which we got right here, where it goes up, taps it, and then immediately goes down and closes. And that's a signature that price is going to continue going lower. And right here, we did get that. Or we didn't get that. We got immediate rebalance, which would have been pretty simple. After this, at the close of this candle, see how price went up here and filled in, made no fair value gap available to form, and then ran down and closed like that. And really, we're already seeing lots of sell side from right here, and we got a really obvious bias. It's showing no interest to sweep out trailed stops, so it's showing expansion. A small trade like this, just down to this low or so. Small trade, but this would be a very nice spot to do it. And after immediate retest occurs, if in the next two candles it doesn't start to run, then it's a smart money reversal technique. And then it's more likely to go the other direction at that point. I'm not sure if it's more likely, it's just not as likely to go down. But then also, right here, our full target wasn't hit, which was that low. So after the immediate rebalance, we formed this fair value gap, and you could have pyramided on the position by having a limit sell order right here and then adding to that position. And then also at that point, once you see this IO Fed work right here, once you see this close, you can move your stop loss to the high of this fair value gap, which is break even, trusting that if it does go up to here, the high of the fair value gap, you don't want to be in that trade because it's not as rambunctious as it was right here. It's not as low resistant to get to its target. But these days are on the 1 minute chart, they're a lot easier to trade. You just have to make sure you know it's that day. So if today were manipulation expansion or manipulation expansion, price would have gone up here to reach these highs because it has to do that. Whether bias is up or down, smart money has to sweep out at minimum the lowest hanging fruit, nearest target, which would be these. These would be the lowest target. And more likely than not, they'd also go and sweep out these because it didn't run much below there before it went to these. It didn't, when these highs, relative equal highs were formed, smart money didn't really run it that far. They only ran it to here before 9:30 occurred. And I also want to include There's something else I wanted to incorporate for this model, but I don't really remember right now. Maybe it was like a max loss limit of 250 or something. Because if I had a, like the past 2 days, it was plus 600 or something like that. But then this day, when I let myself overtrade by longing against it, and it just wrecked my P&L, put me back to break even on the account. And when you keep on longing against this, all the sell side, it just doesn't work out. So having that max loss limit, usually my data shows that after 2 trades, that will be enough for it to rise. And if it goes beyond 2 trades, then the odds taper off, not in my favor. So that goes, the more trades that I take after 2 trades, the more unlikely it becomes that I will actually make any money that day, and that it becomes more likely that I'll just grow my losses for that day, which is exactly what happened. I probably took 5 trades or 6 trades before I finally just realized that today was expansion and noted that I couldn't trade today, or that it was like down here. I think I stopped trading like right here, so I was short or I was longing throughout this portion, sub 1 minute time frames. But every single day that I've observed that hasn't been expansion, my model's always presented itself. And the fourth characteristic for New York AM is just opens and consolidates. It doesn't have any real goal, and that typically happens when we have FOMC day, because FOMC usually releases at 11 a.m. Pacific time, somewhere over here, like 2 p.m. Eastern time, New York PM, and that will make pre-market a lot more active, and that will run a lot more, and that will make New York AM far less active because they're saving a lot of liquidity for FOMC, red folder news days. And also, this model doesn't do as well on FOMC days because it kind of needs there to be discrepancies within New York AM where there's obvious trailed stops. Like today would have been a pretty good day were it not expansion only. It would have been likely that I would have gotten longs up to here, and that would have been nice. But other than that, I really like the model. I've had about a 71% win rate aside from today, because I haven't counted, like I haven't added it to the statistics. Over the course of 3 weeks, I've had a 71% win rate by day, so not each trade, just by day. I don't know, I have no idea what it is by trade. And the RR multiple is usually 1 to 3 minimum, 1 to 4. Sometimes, on rare occasions, it can be 1 to 10. Like if it's really obvious that it's going to go up to here, or something like to this trailed stop, for example, which wasn't a great trailed stop. It would have that would probably be like a 1 to 10 because I can enter at a very good point. Like I can enter sub 1 minute, so I don't have to wait for price to go up here to invert a fair value gap and then long right here. I can wait for an inversion right here and then enter right here. And also, were price to go up to here, it probably would have used this area if it wanted to leave this relatively equal, because smart money was in shorts right here, as we can see right here. They profited off of all that shorts. They were in shorts right there, meaning that they're not going to sweep this high out because that's where their positions are, but they do want to sweep these trailed stops out. And when that happens, I'm just realizing this, when it goes to the furthest extent of trailed stops and the bias is obvious, so it's obviously down, that is going to have probably some of the strongest runs in that direction. And it's going to almost always use consequent encroachment between these two highs, event horizon, which is what it did right here. And it was characterized by a very sharp ripping upwards after we swept the fullest extent of trailed stops before the order block which smart money was in, and it utilized event horizon. The bodies can even go to consequent encroachment or to event horizon. Bodies can even go inside of the order block which showed bullishness. A shout out to Shout out to Koa Stevens. He actually won today. He longed off of this somewhere around here. And his, this stuff is um this stuff is like all of ICT stuff. I guess I'm not making it up. Most of it. Like those three characteristics are from ICT. Alright, later.